Imagine working in a factory in Victorian times, where everything could go wrong and regularly did, and where your employer just shrugged his shoulders and said, "Not my problem." Well, welcome to the Industrial Revolution. Today we're going to take a look at how workplace accidents in the late 1700s and early 1800s helped to create modern protection insurance policies, and why we still rely on those ideas today. The Industrial Revolution completely rewired the UK's economy. Steam engines, textile mills, mining, railways, they were all incredible innovations. But for workers during the Industrial Revolution, it was a dangerous place to be, and accidents happened regularly. And a family that lost their breadwinner could instantly fall into poverty, and the workhouse became an inevitable end. There was no sick pay, there was no income safety net, and no legal requirement for employers to actually protect you, until a landmark case hit the courts in 1837. And this was a real turning point. A young butcher's assistant named Thomas Priestley was injured when an overloaded van collapsed. And instead of blaming the assistant, the courts actually held his employer responsible for allowing the unsafe working practice. In legal terms, it introduced for the first time the concept that an employer actually had a duty of care to their workers. And suddenly workplace accidents weren't just tragedies. They were legal and financial risks for businesses. And almost as soon as employer liability became a real thing, insurers stepped into the fold. Employer liability cover, industrial accident policies, and later, sickness and disability insurance. Many of these early schemes were actually funded by workers' own contributions, and they're the great-grandparents of our modern protection insurance policies. Some of the mutual societies even advertised that for a penny a week, you could protect your income if misfortune struck. A sort of Victorian version of "there's an app for that." And over the course of the next century, the idea developed, giving us income protection insurance, critical illness cover, life insurance, employers' liability insurance, and later we even saw the introduction of state-backed compensation schemes. And today we have the modern version of all of these insurance products, and they exist for the same reasons they did in 1837, to stop one little accident from becoming a financial disaster for a family. And this is particularly important for the self-employed. Builders, tradespeople, sole traders, for all of these groups, income protection is the modern version of Victorian accident insurance. If you can't work due to injury or illness, then these policies step in, exactly where those Victorian workers had no safety net. Today it's the backbone of financial resilience. So next time you hear somebody say, "It'll never happen to me," just remember the Industrial Revolution, a time where it was almost constantly happening to somebody, right up until it happened to Thomas Priestley. And it's that moment that gave us options and the protections we have today. I'm Patrick Wakeman, your local East Midlands Mortgage and Protection Advisor. Links are in the bio, and I'll see you soon.